Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 1st of February. So no sooner have we started a new month, we've also got a new market that's been targeted by the Reddit retail army. That's silver. Now they did target silver last week and I think that was on Thursday, and on Friday the market retraced back to its original sort of price point. Now in early trade this week, the market of silver is up now some 11%, so it's quite a significant move already before the European market even gets going. So silver certainly a market to keep on our watch lists this week. Before we dive into the markets, I just want to remind you of Wednesday's live trading session. It's at 9 o'clock London time. You can join the session. It's free of charge, of course. It's a live trading stream, and the link to register and join is underneath the video here. If you'd like to be sent a reminder and a reminder link, then just join the market newsletter again, which is free to join at smackthemarkets.com. So let's take a look at what's going on with the price of silver at the moment. If we take a look at this on the daily time frame, you can see the significance of the move already this week. The market's gapped up over the weekend. It's now rallied right the way up through this trading window from 28 up to the $30 level, and looking quite extended with some huge gaps in price underneath. If we just take a look at this on the monthly chart, we can see the significance of where the market is at the moment. So 30,000 or $30 I should say on this market sits really around the previous recent high, and also the previous support structure in price. So it is a structure level around here, but getting above here there really isn't an awful lot in the way for a move up there towards that 37, 38 price point, which just takes it into this bit of market structure here that we can see. Now getting past that, of course, there's nothing in the way really from a structure perspective, all the way up to the previous high, which was some 53, just over that $53 level. So the further that the market rises, the less potential resistance or structure resistance is in the way. Having said that, from a trading perspective here, the market's looking rather stretched at this moment, and with huge gaps in price action below the market. So how could we play this? Well, I suppose from an intraday perspective would certainly be looking at the geometry and the technical trends here on the lower time frames. Some of these not looking too bad, as you can see on the 15, the 30 and the 60-minute time frames, starting to look sort of fairly reasonable. Another way that we could consider this is gold and silver tend to be rather correlated, and we could come across to the gold market, which hasn't moved yet, and this hasn't followed suit with silver. Now there is some sort of catch up needed with silver compared to gold over the sort of ratios between the two, but having said that, gold is likely to follow. If that silver market continues to advance significantly, then gold is likely to continue. And if we have a look at gold, you can see that we haven't seen movements in gold as yet. So the sort of levels that we're keeping a close eye on gold is the breakout here at the 1.870 area, the 1900, 1920 and the 1950 price point. They're all structure levels that price action has put in, and they're all areas where, in between, these markets tend to sort of move fairly swiftly from one to the other. Now if we come down to the slightly lower time frames, you can see again here on gold that we've still got these sort of levels. So keeping a close eye on these same structure points, and looking for potential sort of opportunities in gold and of course silver as well. Now if we come over to the Dow here, the Dow, like in all of the popular US markets, the S&Ps and the Nasdaq, they've all pulled back into the weekly zone here, the weekly fair value zone, and starting to find a bit of support in early trade here. Now of course when we start to get into these areas, things start to look rather difficult, because the lower time frames are going to be downtrending. The higher time frames are just on their last chance saloon really here for finding support. If we come over to the daily time frame here, you can see that that 30,000 level, which price is above at the moment, but again, any further advancement to the short side here doesn't sort of bode well for any of these long market structures. In fact, we're going to start to see these long trends significantly taken out, and that's going to start to see more selling and liquidation of stocks. So if we just come down to the 4-hour time frame, we can start to see a bit more significance here on market structure. And if I just zoom out of this, the levels of significance to me at the moment is 30,200, the 30,000 level just under price, and above the 30,200, which is 30,500 here. Now again, if we zoom into this, bear in mind that we're in a short trend here on the 4-hour time frame at the moment. We've got an potentially sort of easy move to complete this trading window into 30,200, pulls it back into the moving averages, into significant resistance. That could be an area where enough resistance may take place for maybe a continuation to the short side. And of course, for this downtrend to continue, we need a close, or we need to, not necessarily a close, but we need a swing down below 29,600. For this short trend to be taken out, we need a move that is going to be significant enough to be able to take out this recent high here, which is at 30,800. So again, huge moves in either direction. Now the sort of thing that we need to be aware of for the bears on these markets is stimulus, and that's certainly something that is being discussed and trying to be sort of ratified at the moment through the US political system. If they can deliver a stimulus package, then that could be, which is sort of on the cards of course, then that could be enough fuel here to advance markets higher. So just sort of bear that in mind. There's quite a lot going on this week, and some big moves potentially here in the markets as well. If we come over to the currency markets now, one of the biggest plays that we've been eyeing up, of course, has been the dollar. The dollar's been strengthening since the beginning of the year, and again, the sort of volatility, the increased volatility in the markets again has helped the dollar to as a sort of safe haven market, and it certainly helped it to strengthen. We've seen at the moment today here a breakout of a level that we've been closely watching on the dollar Swiss. You can see this on the daily time frame, but it's also more significant on the sort of lower time frames like the 4-hour as well. So the downtrend here in dollar Swiss certainly seems to be paused and now sort of reversing, at least for the short term. And we've got a trading window here up to that sort of 90 price point here on the dollar Swiss. You come down to the 4-hour time frame, we can see the significance here of the level, sort of breakout level here. Again, we've got overextension in the market, we've got structure and fair value which is underneath the level, so some sort of retracement back into this sort of level is the sort of thing that we're looking for at the moment, and that could sort of be a nice area to start to look for buying opportunities for a continuation in this market. So there's a few markets there that we're keeping a close eye on going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you on Wednesday. Bye for now.